And we are now joined by Sunil Subramaniam, CEO Sundaram Mutual. Hi Sunil, welcome to ET Now. Uh, we are seeing global activities quite at quite a pace, in the sense where North Korea and US are meeting and sorting out differences, and which are very important differences to sort out when it comes to nuclear arsenal. There is a different kind of war which is going on between China and US, which is a tariff war. I don't know much about that, but the basics of international trades are that a country should manufacture what it is good and at a low cost, and import from other country, and that country should do the vice versa. But this is getting challenged now, and as we were discussing off air, that how it started from Brexit, and now we are seeing two major economies into each other when it comes to tariff wars. Do you think this has potential to derail the global growth?
I wouldn't say that that extremist type of derailing global growth, but what is happening, I think, is a fundamental. You mentioned it in terms of Brexit. What is happening is that there's a realignment of economics and politics. I think that's the thing. And what you said was true, that historically economic advantage was used to drive decision making and trade between countries. That is, manufacture where it's cheapest, sell where the profit margin is the highest. And across countries, this was the free trade is what this is trying to achieve. But what we are seeing is that populism and politics are now coming and interfering with this free economic trade thing. Why? Because increasingly unemployment, recession in the bigger countries has made the people become more inward looking, right? So whether it started with Brexit and it then went on to the Trump election. So the point is that now the political leaders have to cater to the job creation in their countries. So it's not any longer only about the economic advantage. There is also the fact that what can be made within their domestic country, they would like to make it there just to create jobs. Now, how does this play out in economic terms? The point is that you take Trump. How has he acted? That he reduced corporation tax for the American companies. Why? He wanted them to book their profits in America, create more jobs in America. So what is the way forward? Why is China such an issue? Because China was outsourcing the jobs into China. So what is the way forward? The way forward is that US corporations, right? Let's say country like India is actually in a very good position to capture this. Why? Because the population advantage that India has means that we need FDI. So the way forward is that from a US perspective, if they had an American corporation which is going to set up a plant in India, and then it's going to re-export it back to the American, and he's going to show those profits there. Actually, India is in a good position to benefit from this kind of a realignment, because China historically had this advantage, but today 4 times per capita income as China has gone up over the last 10 years. So China is no longer a cheap country for this to do. India continues to be. So I think India can, if we act smart, capture this movement, right, which is essentially American companies come here, manufacture, take it back to your country to serve your people. So some jobs will be created in America by those American companies, some jobs will be yours. I think that's the realignment that we need to,
work on.
Yeah.
Certainly, the cost arbitrage between China and India has decreased substantially as the per capita income of China has gone up. But before we get into domestic sectors and stocks to watch out for, I want to understand, Sunil, from you, that what would be the impact, as you rightly mentioned, that US would start manufacturing more. What would be the impact on commodities because of this? Do you think there would be high demand scenario for commodities in European markets as well as in US markets, and how that eventually would trickle down to global commodity prices and then impact of that on India?
Yeah, so as the US economy recovers and European economy recovers, they are both what you call as developed markets or advanced economies. The key element of the developed markets is that demand drives their GDP growth, right? Why? Because they are short of resources, they're short of people, but their standard of living, per capita incomes are quite high. So whenever GDP recovers in advanced countries, the demand exceeds the supply, right? So this has 2 impacts, right? When the demand is increasing, it's for white goods, it's for consumer durables, it's for those kind of high-end things for which naturally the commodity requirement is quite high. So you're right that any recovery of growth in those countries will lead to a demand for commodities, and hence you will see that this has two impacts now. So actually commodity rich emerging markets, right, their stocks will start getting valued, and I think it's a key risk from India's perspective, because we are not a commodity rich country, and so it's Brazil, Russia, South Africa which are going to, their markets valuation will start reflecting that. So that is a risk factor to watch out for in terms of where FIIs allocate their money. Okay.
Right, Sunil, we'll leave it at that. Thank you so much for joining us here.